Okay, good evening, everyone. I want to go ahead and welcome you to our Tuesday night webinar series. My name is Dave Aquino, and I am the Options Live Trading Room Specialist at Microquant. Now, tonight's webinar will be focused on trading intraday options with MQ Momentum and ValueBars. I am looking over my attendee list, and I'm glad to have a number of people in the audience with us tonight, and that I see some from my options room and some from not. So welcome, and if at any time during this presentation you have questions, let me know. Okay. All right, again, if you have any questions during my presentation, go ahead and submit them via the GoToWebinar side menu. I'll go ahead and try to answer all submitted questions at the time if they're pertinent to the subject that I'm discussing. If not, I'll answer them in the question and answer segment at the end of the presentation. Before we go tonight, I'll make sure that everybody's questions will be addressed. Okay, risk disclaimer. We at Microquant want you to know that trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. Now, this content is subject to change at any time without notice and is provided for the sole purpose of education and assistance in making independent investment decisions. ValueCharts.com has taken reasonable measures to ensure the accuracy of the information contained herein. However, ValueCharts.com does not guarantee its accuracy and is not liable for any loss or damage which may result directly or indirectly from such content or from an inability to access such information or any delay in or failure of transmission or the receipt of any instruction or notification in connection herewith. Any past performance results are shown for illustration and example only, are hypothetical, and as such have many inherent limitations. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. That's the most important point there. Now, CFTC Rule 4.41. This is a U.S. government required disclaimer. The CFTC wants you to know that trading has large potential rewards but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options market. Don't trade money with what you can't afford to lose. And this is neither a solicitation nor an offer to buy or sell securities, futures, or stocks or options on the same. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. The past performance of any trading system or methodology is not necessarily indicative of future results. If you have any questions on either of these two disclaimers, feel free to contact us here at Microquant. Sure thing, Naga. Is that a little bit better? Please let me know if I need to turn this up a little bit more. I will try to speak more directly into the microphone. No problem at all. And I did read your post there. I will address that with you as we go. Thank you. Okay, so let's go ahead and get started with the topic of tonight's webinar: intraday options trading with MQ Momentum and ValueBars. Okay. Now, to summarize what we're going to cover in this webinar, the first thing I'm going to talk about are the indicators that we'll be using trading intraday options. It's value charts, more specifically ValueBars, and MQ Momentum. Secondly, I'm going to talk about some basics of options and how we use them in our trading. And then the third thing I'm going to talk about is one of the trade setups that we use in the options live trading room, specifically the price momentum divergence setup. I'll show you how to find them on the stock charts, and then I'll teach you how to trade them with options. Okay, before we can start talking about our indicators and setups, I want to first touch on what we believe are the three most important components of technical analysis. We have price, we have value, and then we have momentum. Okay? By combining all three components together, we believe it provides us with the most complete view of the current makeup of a market. Okay, now the tools that we use to view these three components of technical analysis: for price, we're going to use the traditional price charts, the open, high, low, close bar charts. For value, we're going to use value charts and by extension value bars. And for momentum, we're going to use the MQ momentum indicator. Okay, now the settings, for those of you that already have the large bundle value charts, we're going to use value charts and value bars, specifically set to a 5-bar analysis period. MQ momentum is at the default 3255 setting. Now we will also have two trend following indicators, MQ regression and MQ trend. MQ regression will be set at a 100-bar analysis period, and MQ trend will be set at 21.4. Now these two just help us trade on the right side of the market, depending on which way the trend is going. I'll show you that in a little while too. Okay, first of all, we want to touch on the nature of value charts. Value charts were specifically designed to provide an objective valuation of the current price of a stock based on the real past prices within an analysis period. Now, usually when they say in the financial paper, we talk about values. Some things at a good value. There's a value fund. Those are subjective price valuations. It's usually based on the opinion of an analyst or a group of analysts or stock pickers that say that Apple's undervalued, you should buy it, or something is Tesla is overvalued, you should sell it, etc. Those are subjective, based on somebody's opinion. What value charts does, it brings in objective evaluation based on past prices. Through value charts, current price is placed within 5 primary value zones. The first zone is this green zone in the center. This represents fair value. Now the yellow valuation zones above and below fair value, those are specifically the moderately overvalued levels and the moderately undervalued levels. Now above and below them, we have the red extreme valuation zones, in which we have significantly overvalued and significantly undervalued price points. Now, historically, prices are contained within, first of all, the green fair valuation zones roughly 66% of the time. Okay, in the moderately overvalued zone, we have prices in there roughly 16% of the time. And then in the moderately undervalued zone, prices are there roughly 16% of the time. Now in the extreme valuation zones, we have prices in the red valuation zones roughly 1 to 2.5% of the time combined. Okay, so what you basically see is that now these percentages can actually vary depending on the markets you're trading or the indicator settings, but as you can see, prices tend to stay within fair value, but periodically enter moderately and then every once in a while significantly overvalued and undervalued levels. Okay, now again, for price, we use open, high, low, close bar charts. This is the typical view, been used over 100 years, and they're a very good representation of price over time. Okay, now each bar represents the trades within a specific time period. If this is a 5-minute bar or an hour bar, or for a specific number of transaction changes, like is this a 100 tick bar or something like that. So this would be 100 different price changes. But those are the two parameters, and they're basically, you have the open on the left side, close on the right side. You have the bar body is formed by the high price, and it reaches down all the way to the low price of the bar. That's how it's represented. Now, you can again see that that is a good representation of price over time. Now if we overlay that with the value charts indicator, we can now see how this bar is represented. right here. We see that prices in this top segment are significantly overvalued. Okay, this middle segment here, these prices are in the moderately overvalued level. Prices in this range here that correspond to the green are in fair value. Prices right in here correspond to the yellow, moderately undervalued levels. And prices down here are represented in the red, extreme, significantly undervalued levels. Now, that is very informative, but it's a little hard to trade if you think about it. Okay, you have to look up here and look down here at the same time. So that's how we created value bars. Okay, value bars actually overlays the value charts color coding system on top of a traditional open, high, low, close bar chart. So you still have the open, you still have the close, you still have the high, you have the low, but you know automatically where it falls within the 5 value zones based on the color of the actual bar. Okay, and this greatly aids you in identifying both price and value very quickly. Speed is important, especially when we're trading intraday. Okay. Now, the third component of technical analysis, momentum, or specifically the momentum of price movements. The tool that we're going to use is the MQ momentum indicator. Now, what MQ momentum does, it seeks to gauge the momentum of a market, which is the strength of a market move when it is moving in one direction or another. Okay? Now, this is similar to a moving average convergence, divergence, or MACD indicator, but MQ momentum is actually a proprietary indicator that comes with the large package that was designed by Mark Helwig. Now, Mark took components of his favorite momentum indicators and basically created a hybrid that kept the most important momentum factors together. Now, looking at MQ momentum, right down here, what we see are 3 items. This blue solid line is the indicator line. The dot is the slow line or the lagging line. And then we have the histogram bars. Basically, the histogram bars shows us the spread between the 2 lines, the the indicator line and the slow line. In general, when the price momentum is bearish, we have the histogram red, and it is negative. The indicator line usually is trending down. When we have price action that is bullish and momentum is bullish, we have the green histogram bars, and usually the indicator line is, the slope of the line is positive and moving up. Okay, so this way you can see that MQ momentum provides a real-time, clear view of both the direction and the strength of the price momentum of a market. Okay, we'll pull this all together later on and see how we use them all together. Okay, so are any questions so far on value bars or MQ momentum? Okay. Please don't hesitate to ask. I'm more than happy to tell you. Naga, any time frame. What I'm specifically talking about now will be later on when I show you price charts. The time frames are all intraday because that's the topic of the webinar. But I can show you some different time frames if you'd like to see that too. Dan, Robert, Bob, Sam, Susan. Anybody have any questions? Okay. Yeah, I know that I have some people from my class, so just want to check with people that I may not be as familiar with. Okay, let's go ahead and take a next step here. The next phase of this webinar, we're going to start talking about options and how we use them in our trading. In the Options Live Trading Room, we're pretty straightforward with our options. We don't try to do anything fancy. I'll explain why. But basically, let's step back and answer the first question. What are options? Options are basically thought of as trading vehicles that derive their value from characteristics of underlying stock. Now these characteristics are price, implied volatility of the price movement of the stock, and the amount of time until expiration of that option. Now options also have other aspects that are desired by investors, and that is leverage and defined risk. Two very important aspects. Now, there are additional characteristics and aspects of options that provide another layer of complexity, but we go into that specifically in the options live trading room. So, but for the purposes of this webinar, we basically want to trade options this way. And when we believe the stock price is going up, we go ahead and buy or go long call options. When we believe that stock price is going to go down, we buy or go long put options. Pretty straightforward. Especially when we're trading intraday, we want to make sure we are very liquid here and can get in and out very quickly. We use options as basically as a leverage substitute for owning the stock. Okay, and specifically, some people have asked, what option do we trade? I know we have all these different strike prices. Basically, when we buy directional options, we buy the Delta 70. The Delta 70 in the money, either a call or a put. And usually we go with the weekly options that expire anywhere from 2 to 8 days, depending on the day of the week. If we're coming into Thursday or Friday, we may go into the next week of the weekly options. It just depends on what we're doing. Okay, but I have traded weekly options that on Friday that expire that Friday. Okay. All right. Let's go ahead and talk about some chart examples. That way I can show you what the trade is that we're looking for, specifically of a divergence. Okay. Now, you guys will like this. This is actually Apple that traded today. Now, I'm going to demonstrate a divergence on a 250 tick bar chart. Again, that's a number of transactions, 250 transactions per, no, I say transactions, but price fluctuations, and it goes to the next bar. But basically, a divergence is when price and momentum diverge. See, right here we have stock prices falling. They come down. They make this first low. You can see that this whole down period corresponds to this red histogram profile right here. Prices come up. You see that in the green histogram bars, and then they come down and make a lower low right here. Okay, but you can see there's a big difference between these histogram bars and these histogram bars. They're much weaker to the downside. Now prices are making an equally low or actual lower price here. So this is a good area for a divergence. Okay, is that clear for everybody? Right, Joe. Exactly. Usually there's a separation like this. That's correct. But you can see price is going lower, momentum is actually going higher, or downside momentum is getting weaker. So here we actually go into a position, we're looking for stock prices to go up, so we buy Delta 70 calls here, and the prices do in fact move up. Okay, is that clear to everybody? Okay, Naga, let me repeat it again. Okay, this is what type of trade we call a price momentum divergence. Now, when we see prices go down, come back up, and go lower, we expect momentum to go down and go lower, right? But what we actually have is when prices go down, come back up, and go lower, we actually have the momentum or the strength of the downward move actually increase, because these set of red bars here corresponds to this whole down move here, okay, resulting in this first low. Then prices come up, okay, here. When they come up, we have the green histogram bars. Now prices come down again. They make even lower low. Look at the histogram profile here. This is much weaker than this. meaning there is less downside pressure, but we're still getting lower prices. So what happens is when we see this difference, this divergence, we expect the price of the stock to go in the opposite direction. Okay? So it's at this point here that we actually purchase Delta 70 calls because we believe that the price of Apple will go up. Okay? And again, not to complicate things, but usually we buy when we hit a moderately overvalued or significantly undervalued level. Did I say that right? A moderately undervalued or significantly undervalued level. And then prices did go up and we made money. Now this was a craziness in the afternoon that corresponded to Carl Icahn's announcement that he was buying some shares in Apple. And he thought that it was undervalued. So this thing really ran. You can see here we're up plus 26. That was this afternoon. So I had to be very careful how I played that. But this was a pretty clear divergence. This trade probably took roughly 2.5, 3 minutes. It was just very quick. Bounce, came up, bounced down, bought Delta 70 calls, shot up right there. And then usually when you buy at moderately undervalued levels, your sell point is moderately overvalued levels. But you can see this thing kept going. So I actually sold some here and I sold some here. This is MQ regression and this is MQ trend. We use this in the room to show us which direction the trend is. Now, even though that these are red, showing the trend is bearish, I disregarded that because you see how strong we're moving up. We're up plus 26. So anytime I could be bullish, take a bullish stance on the stock, that's what I wanted to do. I didn't really want to take the opposite side and face this thing to the downside. It's a lot riskier trying to think Apple's going to fall. Now I can go into some more of the tick chart on Apple later on. But this here is a bullish divergence. It's when price and momentum diverge. Okay? That their prices are going lower, momentum is getting stronger. Put it that way. Okay? So a weaker downside is actually stronger. Okay, you guys understand that? Is that clear? All right, let me show you Google on a tick chart. Okay, prices are coming up. Now these are all live. I didn't really cherry pick a lot of these. I didn't cherry pick these. This is actually off today's tick charts, and I actually traded these. So the prices came up, hit this high level right here, corresponding to this histogram profile here. Prices came down, got red histogram bars, came back up into this area here. Now it corresponded, I could have gotten long in this bar, or I'm sorry, short on this bar or this bar, or bearish, we like to say in the room, and actually take a Delta 70 put position because we believe prices are going to fall. Again, compare this histogram bar with these histogram bars. Okay, indicator line is way up here. It's down here. Prices are going which way? They're actually going higher. So I actually got long or purchased Delta 70 puts in this bar when it was moderately overvalued. Right here where my cursor is. It actually moved a little bit against me and then it fell. It's no problem. It's within a reasonable range. I'm watching the histogram bars. It did move up. It really didn't do anything on the histogram bars. So I had pretty strong feeling this thing was still gonna fall, and I went ahead and traded it down, sold it in this area here. So right here we went from 885 down to close to 883. That's a $2 move on a Delta 70 option. That's about $1.50 change, $1.50 gain on a $15 option. So this right here is a 10% gain on options, and this probably took about 4 minutes, 5 minutes. Okay, so this is what we call a bearish divergence. Because the prices are making equally high or higher highs, the histogram bar is diverging. This is the upside momentum for this high, And this is the upside momentum, right? Either this one, or this one for these highs. So that's diverging. Higher prices, lower momentum means prices are likely to fall. Bought at moderately overvalued, sold at moderately undervalued levels. Okay? Is that clear for everybody there also? All right. Let's take a quick peek at some live examples. Okay? Bear with me if this is a little bit, I don't say messy, but let me know if you guys can have any trouble seeing this. Bear with me. I'm going to get out of PowerPoint. I'm going to discard those annotations. You guys can see this. This is my screen, usually what we see during the live trading room. Okay. This is the trade we saw in just a little while ago in Apple. Trade in Google. Let's scroll through, see if we can see some more divergences here. I will have to mark them off with the arrows because I don't have the ink drawing capability like I do with the PowerPoint. But again, this is a 250 tick bar chart for Apple, 75 tick bar chart for Google. Now, these don't come up, I wouldn't say extremely often, but they do definitely come up. I'm just trying to find some trades that I carried out the other day to show you some real-life examples here. Basically what I'm looking for is a very nice U pattern. That's not cooperating, is it? I think there was a nice trade in Apple. That was today. Bear with me one second. There was a lot of trading today, and it actually created a lot of bars. So sometimes it goes back only a certain number of bars, but here we have that's the trade I showed you. Sometimes we get them at the beginning of the day. Here's one good example. I mean, again, this is real life. This is not something I'm making up, but so prices moved up, made this first high. This kind of dwindled, kind of a divergence, higher prices, lower histogram bars, came up, made the first set of highs, second set of highs. When it made the second set of highs, it didn't even get into the green overvalued level. So I actually took a short position. It moved against me a little bit, added a little bit more here, because the histogram bars didn't really do anything, but the indicator line was actually falling. So we actually added more delta 70 puts here, and then I fell, sold some here. Prices moved up again, and then fell again to the MQ trend dots. Usually these dots provide some support levels like this. But this kind of trade right here is actually right around plus 400. Probably traded 5 contracts. Delta 70 puts, and then sold the delta 70 puts here. What I'm trying to do is find a good divergence pattern. Usually you see them at turning points in the market. Here it's also connected. Prices moved up. They pulled back a little bit. They moved up again. See how the histogram bars were higher here, lower here. When they started to fall, you can see the indicator line start to fall here. You look at the slope of the indicator line. When it goes negative right here, that's when I got short. Delta 70 puts, sold some here, held on a little bit, sold the rest of them here. Watch prices come up again. See, they made an equally high here. See the histogram profile here, barely any green. Went short again here when the indicator line fell again. Sold here at the opposite value level. More delta 70 puts, sold them here. Sold some more here. Bought some more here, delta 70 puts, sold some here. I forgot my arrow. Okay. bought some more Delta 70 puts here. See, it moved up a little bit longer, and then it fell. Sold them here, sold them here. That's pretty good trading. But again, I got out of it this afternoon because I was trading a lot to the downside, and I was actually at lunch here, and Carl Icahn started talking. Bam! Really moved. Really moved. That's when prices are moving like this, you'll have some opportunities. You just have to be selective about your divergences. But you got to also be careful there. You don't want to get caught on the wrong side of divergence. Feel free to ask some questions. MQ regression was green. That's fine. I have no trouble going counter trend on when the MQ regression is green. I don't, because I'm trading primarily with momentum. You can wait to try to get a bullish divergence when MQ regression is green, but you're almost always going to get, when you see, this is a little bit more advanced, we like to bring this up in the room, but you see the slope of MQ regression? MQ regression slope, when it's very strong like this, it's harder to get a divergence. When MQ regression starts to flatten, it always almost goes flat before it converts over to red. You see that? This area here. MQ regression is positive, 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 goes flat, goes to red, goes green, goes red. Usually these areas where it's pretty flat is good for divergences. You're almost always, I don't say most, lots of times you find divergences at the points where MQ regression goes from green to red. Sometimes you'll get into a divergence here, and then you'll be holding a position, a bearish position, because it's green, and then all of a sudden it turns red and you're with the trend. So yeah, there's other ways in the room we're selective about this type of trade that that helps us. Look, here's a good example. Apple 250 tick bar chart. This is a very good example of a divergence trade. I did not take it because I was trading something else, but I remember it now. Prices are red, MQ regression is red, MQ trend is red. Prices are coming down. They make this first low here. Okay, this is the first low. Look at MQ momentum. These bars here, okay, correspond to this whole movement here. The prices come up a little bit and then they come down, make this second low here. Look at the MQ momentum indicator here. Can you see the red? Barely. But you're buying at moderately undervalued levels. That's where value bars come into play. Looking for that yellow bar segment to buy in. And you can go long, buy Delta 70 calls here. And then what do prices do? They shoot up. You can sell here. You can sell here. You can sell it here. Here's a little trick. See the MQ momentum's indicator line? When the slope of this indicator line is pointing up, prices will continue to move up. Okay? Continue to hold the position. I know they're yellow bar segments. I said you sell at yellow bar segments, but as long as the slope of this indicator line is positive, then we can hold the position. Here, this bar right there, when MQ momentum's indicator line goes flat and the slope becomes 0, that is the best, one of the best times to sell right there. Okay. Another trick is when prices are coming up, the MQ trend dots here serve as a reasonable level of resistance. For some reason, when these prices are moving in the direction towards the dots, they usually come close to the dots and they stop. Plus the fact you get significantly overvalued. Those are all little tricks that we use in the options live trading room to keep us in the trade longer. If you took this trade from 468 up to close to 471, this is a $3 move. Let's just say you're able to take that or get at least 2 out of the $3 of the move. It's a delta 70 call. Say you got $1.50. This stock, this option's probably around $15. So it goes from $15 to $16.50. You sell, that's a 10% gain on that option right there. And again, this is a tick chart. So this move here probably took 6 or 7 minutes, depending on how busy Apple is. Okay, this is a beautiful divergence. Strength of the downside. Look at the downside strength here. Nothing. Almost nothing. You guys, is that good? Is that a good example for you? Kind of like to stick with Apple. In the options live trading, we like to trade Apple intraday. We like to trade Google intraday. Main reasons being they are very, very liquid options. The spread is very narrow. Usually it's about a 20-cent spread. You're like, Dave, that's a big spread. I'm not trading spreads. I'm buying and selling an option that if I'm buying a $10 option and it moves 70 cents, I'm not quite concerned about the 10% difference between the mid price and the bid and the ask. The reason why I have different tick charts on my charts is because the volume of the trading in Apple is different than Google. Apple is a lot more trading going on. So I have fine-tuned the number of ticks I use in each. Let me see here. Amazon, I use a 125 tick bar chart. Now, depending on what Amazon's doing, I may shift this down to a 75 tick. Okay. I have a couple more, but these are the three main ones. I have been trading Tesla. Tesla's options tend to be a lot wider spread, and they don't quite. Tesla moves, but on days which it's quiet, it only moves a couple of dollars. Amazon moves slower. You also have to know the nature of the stock that you're trading. There are days where there are days when Apple, those are all the bars you're going to get in Apple in a day. And if it's in a channel, this is what it looks like. There are days where Google was crazier. Amazon is also crazier. It just depends. Okay, any more questions? That's a basic trade anybody can do with, and oh, good question, Joe. All right. Oh, don't worry about that. That's sorry. That is something I'm testing. Trying to work it out, see how it corresponds to MQ momentum. I have used it in the trading room a little bit. Just trying to get it's like a breakout type indicator. That's what it is. But I actually almost only use value bars and MQ momentum, plus MQ regression and MQ trend. That's what we use in the room for our intraday trades. That's all you need, really. Just have to know where to buy at value, when to sell, when the indicator line changes slope. We also do something with the see how far away the indicator line is from the zero line. We also use that as a good indicator. A lot of stuff that we go over in the options live trading room. Yeah, we do very well in there. Not to pat myself on the back too much, but let me show you here. This is the results of today. Now again, I can state it again. Past results are not indicative of future profits. Just not. I can't guarantee we'll do this every day. We are pretty consistent though. We trade very well. We've been refining our techniques. See, and it wasn't just one trade. A little bit of a loss there on that one, but we're buying puts, calls, Google, our trade here, I showed it to you. Delta 70 puts, 130. So the movement today was in Apple. Okay. All right. Let me go ahead and see. Does anybody want to look at anything else? All right then. Let me bring my slideshow back up. All right. Any last questions and answers that I could help you with? Maybe answer. All right. Well, now that we kind of answered your questions at the end there, what time of day do I take these trades? A good question, Naga. Normally we do a lot of our trading in the first hour and a half. At the open, we do a gap fill trade on if the opportunity comes up in those three trading stocks: Apple, Google, Amazon, maybe Tesla. That's from 9:30 anywhere from 10:15. But again, usually we will, if an opportunity comes up, we'll knock out a trade right at the open. Some nice gap filling cascade type trades. Really use MQ momentum to help us time that, and then gives us a good opportunity to catch a move. And then from, I'd say, anywhere from 10:15 to about 11:30, depends on the way it's moving. Sometimes we'll catch a divergence that takes us away from the initial surge in the morning. You put it that way. If Apple's really strong, sometimes we'll catch a divergence and then trade down. Or Google will trade down in the morning in the first 15 minutes and all of a sudden turn around and just run. We try to catch those too. Specifically the trades we cover are in the options live trading room. Our trading room hours are from 9 o'clock to 1 o'clock. Now, usually anywhere from 12 o'clock on, we're basically managing other types of trades. Really, unless something comes up, we may not get it, because that's the doldrums period of the day. People are starting to go to lunch, so they're not as active. But anyway, all right. Feel free to keep asking questions if you have them. But I just wanted to introduce you to my options live trading room. And this is again where we focus on trading setups with options on stocks. Now again, the stocks that we normally follow are Apple, Google, Amazon, recently Tesla, Priceline, Goldman Sachs, MasterCard, LinkedIn, Netflix. We trade intraday, trades that I showed you. And also we do some swing trades. Now these are very interesting. A lot of times we do... I can get into that in a second here, because intraday we usually do directional puts and calls. Swing trading, we do credit spreads. Now we have in the past purchased debit spreads, but we like credit spreads because they give us a little different view, take a little different slant on the way we look at, say, daily charts, and that gives us some good opportunities to write credit spreads, take in premium, and hold those till we can get 75-80% of the credit and keep that, and then we'll get out of the spread, or we'll hold it to expiration. And based on our analysis, kind of we have good opportunities to take some nice credit out of the market with with limited risk in terms of price moving against us and in terms of time exposure. But again, that's something that we definitely like to do in the room. One of our specialties in the room. Again, specifically, our trading room hours are from 9 o'clock until 1 o'clock, and it runs $149 a month. I don't like sitting here saying that, oh, we make a tremendous amount of money, but I had a lady email me today, and she was ecstatic. She made a lot of money in the room. So $149 a month, that works out to $1.80 an hour, almost $1.80 an hour for getting some really good trading exposure. So you can tell where I fall on the value concept of the trading room. Now, if these opportunities to trade options on stocks sound exciting and profitable to you and you'd like to experience more, go ahead and go to valuecharts.com. Go to, let me see if we can do this. I will show you exactly where. Right here, you can see it. I'm bringing it on. Go to live online workshops. Oops, I'm sorry. Here, I'm sorry, the live trading room options. Right here. Now you can enroll now if this sounds like good to you, or go ahead and sign up for a free week trial. Okay, this is a great opportunity. You come in, you try out the room. Tomorrow's Wednesday. It's a good day where we have spreads on that are looking really good. You get to see how we manage those. Opportunities to trade intraday. Apple's going to be strong again. A lot of people are going to get squeezed by that overnight, so there's a potential for it to move up again. Looking forward to those opportunities. We also trade during earnings. That gives us some unique opportunities also. So right there, sign up for the free weekly trial. Right there. Very simple. First name, last name, your email. Go ahead and get your week. Okay? And again, if you have any questions, you can always send me an email. I'd be happy to address them. My name, again, it's dave@microquant.com. I'll be happy to respond to you very quickly, start a discussion, and let me know whatever questions you might have. That's what I'm here for. Okay? Well, again, thank you very much for taking the time to spend with me in this webinar session. I hope you found it informative and exciting. Any questions or comments regarding this webinar can be directed to support@microquant.com, or you can send those questions directly to me at dave@microquant.com. Last takers on any questions? Okay. Again, my name is Dave Aquino, and have a great rest of your evening, and have a great time trading. Thanks a lot.